Ladies and gentlemen, today I have an urgent critical warning for everyone. We need to talk about what's happening in the markets right now, but what's going to happen ahead. Because I see some new huge shifts happening in the markets right now, and I think people are getting it completely wrong. So first thing we're going to cover is the AI bubble. Now, what I'm seeing what's happening with the AI bubble is like what happened in 1999. We had a huge speculative frenzy over what would be world-changing technology, like the internet. Now, the internet did change the world, but with like all new technologies that revolutionize the world, it doesn't mean you pay whatever price for it. We saw a perfect example like Amazon. Their stock crashed 95%, even though it's going to become one of the most powerful and dominant companies in the world. Another example, cryptocurrency. We all knew cryptocurrency was going to revolutionize finance, and it's still in that early process. But again, we see bubbles with cryptocurrency every 4 years. The speculative frenzy comes in, people pay whatever price, but then eventually reality hits and the markets fall back down to their real fundamental levels. Now, this is what I think is causing the stock market mania we're seeing right now. We saw with Nvidia, we saw with their earnings call, all the CEO did was says, yes, chips, AI that, yes, chips, AI this, and the stock went crazy. And this is also the algorithms. They find these buzzwords in these earnings reports and they go nuts. So yes, AI is going to change the world, whether we like it or not. But just like with the internet, just like with cryptocurrencies, it doesn't mean you pay whatever price for it. And many people are thinking this is going to lead to a big bubble and a big bust, just like 1999, and I completely agree, and I think we're in the early phase of that bubble. Because like the old saying goes, the markets can remain irrational longer than you can remain solvent. But that's exactly what's happening right now, everyone. The markets are being irrational. All the macroeconomic data I'm looking at, all the fundamentals, it doesn't add up. Because what's happening at the Federal Reserve right now, they have two mandates. One, keep unemployment low, and also price stability. While they've got unemployment low, it's actually at a 50-year low according to their statistics, and also the latest job data is still coming in hot. So they do have that, but they don't have price stability. Now, what this is leading to many people to think now the Federal Reserve is most likely going to lift interest rates again in June. But I think the Federal Reserve is going to shock the world because the data is being much more sticky with the inflation data, and they could have to go to the impossible 6 or 7%. Because on top of this, other data is coming hot. Apparently spending's still high, GDP is still high, and according to them, they're saying the banking crisis is over. So why should they pause at this June meeting, everyone? They have absolutely no reason to pause whatsoever. And again, with the latest PCE report, that is for personal consumption expenditures, that came in higher than expected. And on top of this, service inflation is still very high at 5.5%. So the markets think the Federal Reserve is going to start cutting interest rates right now, and we're going to go back to all-time highs, I think is very wrong. Because the last time we had inflation this high in the 1970s, it didn't take 2 or 3 years for inflation to get back down to their 2% mandate. It took over 5 years. And this is going to happen again. And all these people that are jumping in prematurely thinking the Federal Reserve is going to cut late this year are going to get a rude shock. Like I've been warning about everybody, they're going to have to take interest rates at least to 6 or 7%. And the reason why they're talking about a pause now, not because they think inflation is going to go back down, but the reason they're doing this is because they're thinking the banking crisis will get worse. Because the whole reason why these banks have been collapsing is because of the Federal Reserve lifting interest rates. Every single time they lift interest rates, it makes these bonds, mortgage-backed securities, commercial mortgage-backed securities fall in value, and they know if they take interest rates to the real level they need to get to, we will see a huge banking crisis, not just for the small regional banks, but for the large banks as well. Now, another big risk for the market right now is overvaluation. Like I talked about with this AI mania, stocks are starting to become very overvalued again, with the S&P 500 price to earnings ratio right now at 24, when the median and the mean is normally 16 to 14. This is showing the stock market is overvalued by at least 30%, as well as the Warren Buffett indicator with right now it's 167% of GDP. Next is the money supply. The money supply is contracting at a pace it has never contracted ever before in history. And the last time it did contract even close to this was the 1929 Great Depression. On top of this, we have a massive demographic crisis right now in the West. We have an aging population. Millennials aren't making nearly as many kids as their parents did, and this means we're going to have an aging population population, a huge labor shortage, and it's also going to mean it's going to be a big drain on taxpayers to pay for all these baby boomers' retirement. And I fear that these pension funds for the baby boomers are going to get bust because they're not going to be able to afford to pay it out. But even if they didn't go bust, retirees spend a lot less money trying to reserve their capital throughout their retirement. So this is going to mean there's going to be a lot less growth and a lot less spending in the future. But that's not all, everyone. Another big issue we have right now is a massive debt crisis. The world has never been in so much debt because interest rates were pretty much at zero. People could borrow as much money as they wanted. But now that we're going back into an interest rate hike cycle, people aren't going to be able to go on a debt binge like they could before. And all these people thinking their interest rates are going to get cut, again, like I was saying earlier, they're not going to get cut. They're going to stay much higher and for much longer. But I think one of the biggest risks on top of all of this is a geopolitical risk. We're seeing tensions between the US and China. They're getting worse and worse and worse. And if trade stops between the US and China, we're going to see the global economy completely collapse. Now, I know that's a lot to take in, so you're probably thinking, well, what can you do to protect yourself and protect your wealth? Well, what I'm doing, everyone, not financial advice, just telling you what I'm doing. I'm diversifying to gold, silver, and Bitcoin. Now, you may be thinking, well, why wouldn't you just go all in gold, all in silver, all in Bitcoin? Well, you need to be diversified, everybody. And what I think a lot of people do is they're either in the precious metals camp or the cryptocurrency camp. And when I talk about cryptocurrency, I'm more talking about Bitcoin because Bitcoin is king, kind of like gold and cash is king. The reason you want gold and silver is because if things hit the fan, if the US dollar collapses, you will have something that is valuable no matter what around the world. Also, if we do enter a huge recession or even depression, we're going to see a huge flight to safety. People going to want to preserve their wealth, and like in other crises, everybody flocked to gold, like what we saw in 2020, and gold will skyrocket in value, and then silver tends to follow gold. Now, the reason you want Bitcoin, that can also hedge this scenario. Say, for example, there is a huge melt up in the market. Well, Bitcoin will go up during that melt up, even if gold isn't performing. Also, too, if you need to get out of the country ASAP, for example, if things really hit the fan in the US, you need to leave. It's very hard to take, for example, 200,000, 500,000, $1 million worth of gold across borders through the airport, especially if you want to hold it physically, because I know a lot of people say if you don't hold it, you don't own it. Well, in crypto, they say if it's not your keys, it's not your crypto. So if you need to get out of the country and transfer huge amounts of wealth, Bitcoin has a huge benefit of that as well, with you being able to store it in cold storage or memorizing your private key and be able to get out of the country transferring huge amounts of wealth. So again, you can't just go either all crypto or either all gold and silver. They can work together, everyone. But everyone, just let this be a warning to you that the markets are being irrational right now. I know it can be hard waiting for the crash. It feels like it's forever, but it will come, everyone. The fundamentals are saying a crash is going to come. You can never figure out what exact day or what exact second will happen, but we know the signs are here. But everyone, what do you think about all of this? Let me know down below. Now, also, if you want to sign up to my free newsletter, I'll put a link in the description to get access to all my research and notes. Now, thanks for watching. You're awesome. I'll see you all in the next video.